And before we begin, I actually want us to shake off the lunch bar, that delicious lunch. You see the pastries? Did you have the macarons? They were so good, right? So we're going to shake things up a little bit. I want you to stand up if you agree with the statement that I'm going to say, and then you can look around to see who else stood up so that you can start knowing your community with this. Don't worry, they're not embarrassing questions whatsoever. I'm not going to ask, are you single or not? No, it's fine. So we're going to be 3 questions, pretty easy. So please stand if you've ever worked on a project where the climate goals were in tension with the social goals. Yeah, that they were maybe contradictory, or the climate goals were going to create perhaps bad impacts on the social aspects. Okay, question again. Have you ever been part of a project where the climate goals perhaps were in conflict or in tension with the social goals? Okay, good. Please stand up if you're curious about how your institution can do more to support a fairer transition. That's good, that's good. Okay, please stand up if you've ever thought, our organization is doing something, it's doing good, we feel that we can do more. No, raising the hand is not enough. We're shaking the fuck from the lunch. Thank you for that. Fantastic. Thank you for that. Seriously. Okay, now I'm going to get started, but I'm going to actually move to the podium so that I don't distract you with all the movement. Try to control it up. And actually leave this here. Yes, I know. Don't freak out. Okay, so now what we're here to reflect today is not just where we're going, but how we're going to get there. And the important aspect is that we need to get there in a way that is the right way. Okay, there are multiple ways to get to that future that we want, but the right one is the one that is inclusive. The right one is where we don't leave anyone behind as we transition. This transition to economies that are low carbon, that are climate resilient, they need to be fair. That means that they need to be inclusive and they need to be rooted in people's realities. Remember yesterday with healthy inclusive economies, we were talking about that we need to create products that meet our customers in their realities, not what we think their realities are. Mitigation and adaptation are what we talk about when we say just transition for climate action. But when we talk about mitigation and we say that it is about phasing out high-emitting activities, it's important to understand what comes with that from a social point of view. And that means, we're going to have some job losses. We're going to be affecting not only the workers, but also entire communities. At the same time, green jobs are growing, but they're not automatically inclusive. They can raise issues around land use, labor rights, and access, especially for indigenous communities and women. Women are very important in the just transition. Adaptation, on the other hand, is about helping communities cope with climate impacts, but here the risk is maladaptation. Actions that unintentionally make people more vulnerable or leave them behind. The transformation needed for a just transition requires an integrated approach. Yes, we need strong policies and regulation, but financial institutions are a central pillar of this change. I personally think that financial institutions have the capacity to become those architects of the just transition, because you are making decisions on where the finance is going. And so that means that you can also say, well, the bathroom goes here, the kitchen here, I want it with marble, I want it with this type of tile, I want this iron holdings, etc. Banks and insurers can finance economic activities that support the just transition. They can incentivize positive change. They can improve financial health and inclusion and help society prepare for climate and transition-related risks. And they don't just shift their own practices. They influence their clients. And, you shape the market. If you shape the markets, you're also shaping the future. So as we move through the session, I invite you to ask yourselves the following question. And don't worry, you don't have to scan a QR code to come into the post or anything like that, and you don't have to comment it in your table if you don't want to. You can take it to the coffee break though if you want to have an icebreaker for the networking. But ask yourselves, how are we in our organization supporting a transition that's not only fast but fair? And what more can you do together to make that happen? Now, to help us root this conversation in the regional reality, I'd like to welcome Walid, Machrouh, yay, who leads the Green for Youth project at the International Labour Organization. UNEP has been working with the ILO for many years now, and we have actually different projects running around. This year we'll be presenting a decent work guidance, so stay tuned for that in the second semester so that you can learn a lot about how you can do more for decent work. He works directly with young people and communities across the region and brings a powerful on-the-ground perspective into this transition. So, Walid, the floor is all yours.
Test. 1. This is perfect. Thank you so much, Laura, for the good basis and also for shortening my presentation on adaptation mitigation concepts, but also for pronouncing my name in a good way, which is Machrouh, not Machrouh. So today we have the pleasure to be with you to present the concept of just transition from a NILO perspective and also to give this regional contextualization regarding the positioning of the question with all the engagement from NDC to policy engagement and more, but also to see the topic from a financial perspective and how financial institutions can contribute in an effective way and manner. First of all, when we talk always about the climate change, we miss the fact that the climate change is impacting directly the world of work, and here we are mainly mentioning the triple planetary crisis, which concerning 3K topics or 3K problems: climate change, pollution, and also harm to biodiversity. And the way we are attacking, but also tackling those questions are through 3 different levels. The first one is macro, and here we are talking more about policy, strategies, also the regulatory framework. Second is more meso, and here where we see the positioning of private sector, financial institutions, vocational training institutions, etc. And the most also important part where we can see the impact, and especially the social impact, is the macro level. And here we are targeting directly our target audiences, but also reaching the vulnerable one from women, youth, and more. Also, just like for some alarming indicators on the climate change, and I think that the number is a little bit big, that 2.2 billion people now are dependent on ecosystem services, biodiversity related activities, agriculture, blue economy, and etc. And if no action will be made by us, or we will stay and still in the same path, we will lose 2% of working hours. And you can do the math and resonate it from a financial perspective. But if we make action, we have this capacity to create more jobs, to have more economic inclusive growth, which is the basis of the just transition question. Also, another question that we always have in mind is that with this transition, we will only create jobs. Unfortunately, it's not the reality. We will create jobs as we will start to shift the economies toward new activities, toward new technologies, toward new sectors. We will lose jobs and eliminate jobs if we have any regulations against like fossil fuels activities. We will lose the jobs within the sectors. Also, the same with other examples. We will have the replacement of jobs, and here I can give the example of having technicians passing from fossil fuels activities to electrical activities, and they need to redefine all their occupation needs, skills, etc. And the other part is redefining jobs. Like today we have some simple jobs like having electricians, people working on simple water adjustment, etc. But they will need now to tackle this question from a more sustainable and also renewable way. this is like kind of the boring and the most boring part, which is always about definitions, but it's important to have this common understanding for the question. So here, we are always talking about and interacting about just transition, but what's exactly this concept? The definition of just transition by ILO is maximizing the social and economic opportunities of climate action while minimizing and carefully managing any challenges, including through effective social dialogue among all groups impacted and respect for fundamental labor principles and rights. The idea is really to leave no one behind and to have this holistic approach by approaching all sectors and all countries, because everyone is involved from citizen level to the decision maker at the political level. And also just to add this, how can I say that, key pillars to the just transition discussion. Within the ILO, we had the development of 9 and the immersion, we can say immersion of 9 policy areas, or we can also name them the enablers to just transition. And here where financial institutions can find and project themselves, we are attacking it through the macroeconomic and growth policies, industrial and sectorial policies, because each sector needs a different treatment from other sector, enterprise policies, skills development, and it concerns directly the redefinition of jobs and the replacement of jobs, occupational safety and health, SST, social protection, and its big priority given the example now in Morocco, active labor market policies, right, but also social dialogue and tripartism. And here, just like to talk more about what we gain because of like this just transition. The idea is to have more environmental quality and improvement in resilience, gains in jobs and incomes, but also have less generated impacts, but also less gaps within the social equity part. In a more concrete way, all our countries engaged in the NDC process following the Paris Agreement, and the unfortunate part is that just a small, or we can say a minority of countries expressed their full engagement on just transition aspects. And here I will just give some examples from NDC 2.0, which is National Determined Contributions, and now everyone is talking on the topic in the different countries, even here in Morocco, that only 5 countries mentioned social dialogue and this holistic way of attacking labor questions and green transition in their indices. Like 5 countries among 170. Only 31 countries also mentioned the social protection part. And to move on with this aspect and beyond the social implications, we had also this exercise about like GDP growth using a model on emission, on energy, emission and economy modeling. It's an input-output statistical model. And with this model, we had this baseline scenario where we had like the current policies implemented by the different countries. Unfortunately, Morocco wasn't like among the countries adopting this model, and we are working with HCP, which is the Ministry of Planification, on the topic. But the idea was to try and to test the different policies we are trying to emerge within our ecosystem. The first one was NDC, and by just engaging in NDCs as they are, we are remarking a loss in GDP by 2030. Also, the second level was to have like strong industrial policy scenarios, and here we see like much more gain, but it's still kind of modest. But the biggest impact or the biggest gain is generated through the climate resilience scenario, where we have both good regulatory approaches, good policies implemented, but also good financial instruments mobilized and implemented to accompany this transition. I will keep it this way, and then in my intervention try to focus more on youth positioning within the question, but also the financial sector. And yeah, over to you again, Laura.
Thank you, Walid, and I invite you to stay here for the panel. Thank you for that. And now please help me welcome the rest of our panelists for this session. We first have Rachael Antwi. She is the Group Head of Sustainability and ESRM at Ecobank Group. Rachael, happy to have you here. Mamoun, he's the Director of Strategy and Development at Bank of Africa. We also have Edmund Otaigbe. He is the Group Head of Credit Administration, Governance and Project Monitoring at Access Bank. And finally, we have Yusuf. Bodiat. He is the Head of Finance and Investment at the African Risk Council. Please welcome them. Okay, let's begin then. Now, we have different realities, different countries that you're coming from, and so I want to actually focus on that. And so my first question is, how do you see just transition in your context, in the banking context where you're coming from? And what are the biggest challenges your institution faces when integrating social aspects into climate finance? I'll start with you, Rachael.
Thank you very much. So, from starting first for Ecobank, from where I sit in Africa, firstly, the just transition, as we know, has been really unfair. The climate models show that they're really not feasible for African countries to sort of decarbonize along the same lines and with the same timelines. And it's always, secondly, been centered around mainly just the energy transition and everything. And today, my focus on 5 points. The first one is the just transition should not just be about sometimes stranded assets, assets being stranded, etc., but it's also about people, making sure that we leave no one behind, no one is excluded from it. If you look at the context of Africa, there's a lot of, even if you take the countries like South Africa out of it, or Morocco, other countries in Middle Africa, there's a lot of an informal market. There is a lot of highly industrialized market as well. And the economies need quite a lot of support. It's not easy for those economies to just transition as easily as maybe other European countries or the global south. But there's really a need to you to carry them along. One of the key problems that I find sitting where I am in Ecobank is that while social justice and social inclusion is quite obvious to all of us, is morally obvious that we need to do, it is not really priced into our credit models. So you find that, the social risk and everything we will consider it as being important, as very good, but it's not priced well to be able to have the kind of impact that we have. So when an organization sort of looks at it and includes it, we will find that because it is not priced into our credit models, and therefore the impact is not really considered across the whole organization, its impact is very low, and the focus of it is also very low. So from my angle, where I think that from a just transition perspective, for Ecobank or for other banks and financial institutions to be able to be effective in helping to solve the just transition problem and drive increased utility, one of the key things we have to do is start pricing in social risk, social inclusion into pricing models or credit models, and along that whole value chain within the organization, including different products and everything. And you see that once you look at it, because most of the time, finances only care about price. How much is it moving the needle? And if it is not being seen that way, then you don't even get the board being involved. So for example, once you start including it in price, then when you create an instrument, a financial instrument which we later talk about, where there are social considerations in it, if the customer is able to meet your benefits, it influences the price. It can lower the price, or it can increase the price. That already becomes a benefit for the organization. And also where there is a disadvantage, or where the customer does not comply with certain things that we put in, there is a penalty for the customer. So until we are able to price in this risk, social inclusion, pricing the risk, pricing the benefits of gender and everything into our own credit models, into our own systems, enterprise risk management systems, we will not be able to see the kind of impact that we want to see and drive an inclusion that's not only based on decarbonization but bringing everybody along, including the biggest disadvantaged people in our communities, which are sometimes even the SMEs that we work with generally in the society. So those are some of my key points, and my call to action is to drive social inclusion from a just transition perspective. As a financial institution in my context, I believe that we should look at it not only from decarbonization, but also from not having stranded people, not just stranded assets. Thank you.
That is such an important point, and I see the rest of the panel as well. Yes, indeed, you have to do that. What's your take?
First of all, thank you very much for inviting Bank of Africa to this panel, and globally to this UNEP event. What I have to International, talking about stranded people and only stranded assets, which is really a good notion to include. I would just try to represent French here about what she said to the concept. First thing is that, of course, we need to include pricing of social aspects into the interest rate or the price that customer pay for the loan. It's a very innovative idea. Now the thing is that from our perspective as a bank in Morocco, first we have a market, a global market. We're not a only bank, we're really associated banks. And the fact is that it's I'm saying French, it's not really because it's a problem of the global banking system in Morocco. It's really tough to be the forerunner in a special subject, to hide the price, or to link the price to special environmental or even social aspects of the project, and then impact the client or the customer with the price, given the fact that other banks won't do the same thing. So now the real question here is first, who should provide background for this? Is it the central bank, the documentation, etc.? So this is to be clear that the rules of play are the same for everyone, and for the competitiveness to be fair. Fairness and competitiveness is the first concept that I want to introduce in this kind of transition. The second thing is that as a bank, we have been introducing the environmental and social management system since 2019 for our investment credits. It works. Each time that we have an investment from a customer, huge amount, we kind of scan it through a series of items, and then we have a remediation plan. Now the thing is that we're supposed to make the remediation plan mandatory, but we're the only bank in Morocco doing this. So if you have a good signature, the client will come and say, okay, you'll be imposing this, so I want to do it, I will go and fetch or for that bank. So once again, this is the kind of competitiveness. So what we do, we provide some supporting to implement the remediation plan, but it's not mandatory. We do not mandatory. But on the other side, what we're doing is that we are holding huge conferences. We developed a whole ecosystem dedicated to sustainability, and to make sure that each time we go meet customers, non-customers, local authorities, etc., in regions, to be able to try to convince these people that environmental and social strategies or approaches are really mandatory for the banking system. And we can go back in history and see and say why banks are responsible for financial emissions. Because they are planning the decarbonization process. Because they assess their financial emissions, and then the thing is that we're asking them to support the clients in their decarbonization transition. Once again, why do banks have to do it? So the same way that we ask banks to step up for the decarbonization process, we should ask banks to step up for the better, for just transition. So this is maybe the second thing that I would like to say, and then it should be on a global phase. Now for us in Africa, sorry, but I would say that you know that Africa is only accounting for 3% of global emissions. So, but regarding social aspects, we're much more involved and much more concerned by social aspects and environmental aspects. So maybe we should, as a continent or as countries or as something like that, try to find a way, our own, let's say not decarbonization process, but our own social improvement process for our global customers and even for the employees and the global population. We would do that.
That's also a very strong point in there. And something that really sticks with me is this aspect that you might have the best intentions, but you cannot go alone. You have to have your ecosystem with you. You have to have the right partnership. You have to be advocating for this, and you have to bring in your value chain into the work, otherwise it's really not going to happen again in the right way. Multiple ways to get there, but there's always a right one that is not leaving people behind. So that's very powerful as well. Edmund, what do you think?
Okay, thank you very much. I'd like to piggyback from what Mamoun has said. So when we think about Africa, and 3.8% of the global emission is what Africa accounts for. And we also know that Africa has 3% of the climate financing funds. So the first question I asked myself was, why should Africa even be bothered? If it's only 3.8%, then we should just raise the money for 3.8%. But the reality is the reason why Africa is described as a high-risk location is because we don't have enough fund to address climate risk. And when you think about that, you now think about the COP29. So $300 billion has been committed. But that $300 billion is even understated because the entire amount required to address decarbonization is about $1.3 trillion. Now, the issue is 3% of that is significant. But in Africa, we have an estimate of how much funding we require to address our own climate risk. And if we're thinking about our own climate risk, why is this important? Africa is vulnerable. Vulnerable to the extent that not so many countries have adopted climate risk. Not so many countries in Africa driving it at the way it should be. Imagine in the previous conversation, somebody said it's only South Africa, it's only Ghana that is at the forefront of carbon markets. So we can see that Africa as an entity itself, we are lagging behind, not because we emit so much, but because we don't have the financial muscle to address our needs. And this need also shows that Africa has the most vulnerable people in terms of transition and the impact. So, to address this problem, I would look at it from an ecosystem perspective. So when we're looking at climate financing and as looking at decarbonization, why don't we think about it from an ecosystem perspective, where we're thinking of not just the social and environmental risks, we are thinking about the related parties, the people that will be displaced and all of that. And Rachael rightly said, who will bear that cost of financing to address these other needs? So I think the primary issue here is in Africa or in sub-Saharan Africa, where I come from, Nigeria, we don't have sufficient local policy incentives that support social initiatives. So are there incentives for banks? So if banks want to go into this, if banks want to support it, what incentives do we have? I agree the other speakers have spoken in previous days about taxonomy, about regulatory, but the truth is, for me, to support a just transition is a holistic approach. And it cannot be for just a client that has a decarbonization project and I want to support that project. That client is thinking about just that project and is thinking about the ROE on that project. So who takes care of the other aspects that will come? Who takes care about the unemployment, the retooling, the reskilling, the relocation, the displacement, where we know that people rely on fossil fuel. I know that in my part of Africa, sub-Saharan Africa, over 970 million people rely on fossil fuel for their power. Their cooking is still with fossil fuel. Kerosene. Now, if that is the case, they don't have an alternative. They don't know what else to do. And should they have an alternative, who funds this? How will the funding become accessible to them and at whose cost? So I think a lot still has to be done in ensuring a just transition because climate risk financing is not just about decarbonization.
we improve the well-being of people as we are helping the planet, right? And it is a call for innovation for sure, and to learn from the mistakes of others, but also show them the way in what can be created, even from scarcity, because that's where the biggest ideas can come from. So indeed, that's a very cool, very powerful statement. Now, insurance is instrumental to support the process, right? So what can you tell us about the role that insurance has, the challenges, the context in which you have to operate to help the just transition?
Yeah, so let's talk about the problems first, and then we can get to the solution. So what we find is that the least protected in Africa are the most impacted. And by that I mean it's the farmers, the informal workers, the women and the children that need the insurance coverage. That's probably the first problem that we have with insurance. Secondly, this is just generally in Africa, the coverage or the penetration of insurance is extremely low. And there's many reasons for that. And I think the simplest way to explain it is in Africa, and just generally speaking, not looking at cities or urban areas, but in rural areas, we haven't adopted the idea of insurance yet. And because of trust, because of affordability, or many other reasons. The other challenge is that we have insurance solutions that have been developed in first world countries or developed markets that have been transitioned so much with AI and technology, and we in Africa haven't adopted basic insurance principles yet. And we're trying to retrofit a model of insurance that's working for developed markets that isn't maybe for Africa yet. So the insurance products are not catered for Africa. So those are the key problems that we face with insurance. And then finally, insurance is just too expensive at the moment. Again, multifaceted reasons, but it could be because everyone's profit driven. So pricing products that makes a profit instead of having an impact. And again, you can go on with different reasons why it's so expensive. The solutions probably are more important. And as I was thinking about what to say about that, I think the key problem is when we're preparing or creating products for Africa, it's listening to what is needed, creating the products on the ground. And by that I mean we're very focused on sitting in boardrooms and using our technology and degrees and university degrees to create solutions for Africa. Climate change is moving at a faster pace than our degrees and our knowledge is moving. So we need to create products that are needed on the ground, and by that listening to the people on the ground, asking them what they need and creating the solutions from the ground, not from the top down. And then finally, the type of products need to be cash-based, mobile payments, not fintech technology yet, so that the people we're trying to get insurance to understand it. And finally, we need to earn the trust of the people. So again, face-to-face interaction is needed with people, explaining to them how the product works, explaining to them what the impact could be of them using the product. And the way I explain it is, if you can explain an insurance product to a 5-year-old, you can explain it to everyone. Not having it too complicated, we ourselves don't understand the struggles. So it's a lot of different thoughts at once, but it's just simplifying, make it affordable, and make it understandable for everyone.
That is extremely important. My dad has this expression that says, you cannot change reality from a desk in your office. You have to go and meet the reality face on. And that applies when you're trying to make social change. So that's a very, very important. And I want to know how many insurances do we have in the audience at the moment. Can you raise your hands? Sir, I think you were the only one also yesterday. You're my hero. Thank you for caring about this topic seriously. Well, if you could reach out to the regional coordinators that we have here in Africa. Are you here by any chance? No? Okay, I'll introduce them to you. We have a fantastic case study from Colombia with Bancamia and Machrouh, creating microinsurance products for women entrepreneurs to ensure, these women that are selling products from Jambal or brands like this, nobody was insuring their suitcases with all the products, and if they got stolen, they stole all their inventory and their money. And they are now insuring that, and it's only $1 per month. Things like this that are really manageable for them, and even beyond that. So let's talk later so that you can know more about this and be one of the first ones to innovate. Really cool here. AXA in Colombia? Yes, there are many examples. But let's discuss it. Sorry about that, guys. But it's honestly a fantastic example. And yesterday in the conversation, we were talking about how we need more microinsurance innovative solutions in Africa. If the take is so low right now, if they need to be easier to understand and also affordable, that I think is also very key. It's affordable. Now, let's go back to you. And the question here is, can you tell us a bit more about your work with Green for Youth? What are the key challenges young people are facing in this transition, and how can financial institutions support them more effectively?
Yes, thank you so much, Laura, and also to all the panelists, because you raised two key points and structural problems. The first one is the coordination at the strategic level. And when we are having this communication, at least between the financial sector, decision maker, and regulatory and policy points, but also with the youth in the field, I think something don't match up. And the other complementary point, which is also to make and to keep the human at the center of change, at the center of discussion. And here, what we are trying to do with the Green for Youth project, with this project, it's within a whole and global dynamic between UNEP, ILO, and UNICEF, which is called Green Jobs for Youth Pact. And the idea between this project is not to tackle only youth employment in green jobs directly as a micro action. But the first thing about how to enable an environment that can accept this transition to youth from education, training to employment. Knowing also that we have more structural problems, and I will give just two key numbers. In Africa, we have 400 million youth. 1 on 5 are not in education, not in employment, not in trading. So are losing a big world economic force, we can name it whatever, but we are losing a lot of humans behind.
Wait, the statistic is 1 in every 4 youth.
In 5.
1 in every 5 is need.
In Morocco, 1 in every 4. In Morocco, I'm talking about 1 in every 4 are needs, and an employment rate of 36%, which is triple the.
Sorry, this is the face I'm making.
Yes. And here, because we are talking about green economy growth, we are expecting like the human to make it happen. And if we are having those humans and this big target audience outside the market, who will make it happen? They don't have the skills, they don't have the tools, and they don't have a place or a voice to say, to advocate for their work and their placement. And here, what is really critical at this point of just transition, because just transition is not about just like having like the luxury and the nice to have, talking about social and human aspects, but really on how can we ensure the continuity of our economic growth by ensuring that everyone is contributing to this transition. And just to back to the aim from the Green for Youth project, what we are aiming is 3 levels of, we can say, interventions. The first one is at the macro level. We are working with the Ministry of Just Transition, Ministry of Labor, but also social partners, CGM, which is the representatives of employers, and also the syndicates, trade unions, representatives of workers, to build kind of coordination platform on just transition and green jobs where they can align them. First of all, their understanding of the concept, where we can know what is happening within different institutions, within different coalitions, but then to have like at least a common work plan where they can work together. And here we are having a specific project for financial sector. We are now in the discussion phase with the Ministry of Finance, Central Bank, but also Tahri-Joutei as the guarantee institute in Morocco. And the idea is to do a scoping of this interaction between MSMEs led by youth and the different financial offers and products available within the market. And what's the exact gaps from the MSMEs point of view? Because again, we need to have this human-centered approach. Second is to see what are the gaps that the financial sector can fill and to have this kind of capacity building with the financial insurance sector, but also the guarantee institutions. And third, to try to test, we can say, a specific technical assistance with the integrator of ecosystem of finance enterprises, which is the guarantee institution. So we try to have this holistic approach before talking about vocational training, before talking about getting jobs, getting entrepreneurship or whatever. We need to have like an environment ready to work with this youth. And I think this is my call to action before passing the first way, is really this partnership and this win-win approach, and how can we attacks it all together from political POV, but also from a banking financial POV.
Indeed, because it creates a lot of frustration when you put in so much time into studying and learning a new skill, and then you go out and it's like, it's no longer needed. Or the industry is not ready for you, so you don't have a job. So now you probably maybe have a scholarship that you have to, not a scholarship, but a student loan to pay, and you have no job, and then you end up working on something that wasn't what you decided for, not what you were passionate about. And I think that connects a lot with what everyone has been talking about, working with the value chain, working with the environment. And we've seen initiatives throughout the world, and in my role, I get to speak to banks around the world and what they're doing regarding creating jobs for youth, connecting that with green jobs, transforming the sectors that are being financed, so these are helping the transition, etc. So I do think that banks and insurers can do a lot into how they're redirecting, kind of saying, you know, like how a mom helps you and she's like not really telling you, but she's like making faces and you already know what she needs. A bank can do that. It's like, no, not that way.
Just a quick point, like one of the realities we are facing with the APC process now is that all the countries are engaging on something, you can say positive, realistic, optimistic engagements. But if you want to do this green transition, we need the labor force to do it. And to do so, we will have another couple of years to train the youth to do this, or to be trained and to be ready for this kind of jobs to enable this green transition. So it's a big growth economy, we can say loss, if you don't take it into consideration and have all the social aspects from the beginning, not till the end.
Yeah, you can connect your scholarship program from your foundation to the MSMEs that you're financing. We even have a bank that has kind of a yearly challenge for MSMEs, and they come in through the voluntary work that the bank has. They are mentoring and reskilling people inside the MSME so that they can be a better business and give more jobs, for example. And so it just connects everything. Like you were saying, holistic approach. It needs to be holistic, otherwise it won't work. But then let's go over to you again on initiatives that Ecobank has that are working, that are helping.
Okay, thank you very much. But if you please pardon me, I just still want to respond to something that I think from the macro level, in terms of climate finance, at the macro level there could be some conversations around what is the direction. Since countries are signing up with the net zero 2050, so what's the direction in terms of renewable energy? What's the direction in terms of waste? And based on these different areas, there can be policy conversations around scaling people, tooling people, because we know that the eventual displacement will happen. So from a macro level, there can be policy direction around training, getting people, it's like preparing them before it happens. So you are training the MSMEs, you are training the youth, you are training the women to start developing these skills before it happens. And that way it enables that transitioning from what is to what will be, and the funding that they require, everything that they require to set them up will happen. In Access Bank, it's not at the macro, it's at the micro level. So in Access Bank, there are a few initiatives that we've done and we're doing. One of them is, of course, we are signed up to the principle for responsible banking. We have ESG embedded in all of our core operations. We have our appraisals of credit has a social and environmental context. But what is more instructive is that we set up a sustainable financing group. Now, the interesting part about what the group does is that it's broken into 3 layers: the financing, the accelerator, and the grants. So we engage based on new areas that we're going into, and we identify startups, people that want to gain skill in this area, and they get into an accelerator program. So the accelerator program will bring people that are experienced in these areas to come prepared. And once that is done, if they have an initiative, then by the time we assess that initiative, it's something that requires housing projects that we came into. It's a 5-year-long project. The housing deficit in Africa in Nigeria is significant, over 17 million housing deficit. So we are trying to contribute or catalyze the 100,000 homes. Now these homes, we are not thinking about it in just affordable homes. We want the homes to be green homes. We want the homes to be smart to the level of affordability. Of course, with renewable energy and all that. Then we've also looked at several things with the SMEs. I think my colleague yesterday spoke to what we are doing with women folk. The idea is once you think about that, you start saying those parameters, those index you show, misery index will come down because we are doing something. Thank you.
Thank you for that, Edmund. And given that the time is very short, we have only 4 minutes left, I'm going to have to ask Rachael and Mamoun to be very short with their answers about their initiatives. Rachel?
Thank you very much. So, as you know, Ecobank is leading on a number of fronts in terms of initiatives. We've done a sustainability linked loan, a bond, etc. One of the key ones that resonates, including the discussions yesterday on inclusivity and all of that. We recently issued a gender bond, which we did, which was funded by IFC and a number of partners. And the idea of gender bond is to bring more women to finance, more women SMEs, more women businesses. This is on top of another initiative we have, which is the Elevate program, which I don't know if you guys have heard about it, but we were one of the first in the rest of Africa doing so. One of the first to do a program which is just centered on finance and women. So we have two, a gender bond that was recently issued to finance SMEs, TAGET, which got a lot of representation. In fact, this bond is so good that the Luxembourg Stock Exchange even reached out to us to list the bond on there. And the impact from the bond is phenomenal. It comes with technical assistance for women-based businesses. We train them on, so for example, how to assess credit, how to build a balance sheet, how to do basic financial modeling. And the training comes from big institutions like Yale and the rest of them. So a gender bond is one of the ways that I know in the market in Africa. Ecobank is the only bank that has that on top of our Elevate program. Apart from that as well, we support an e-mobility quite a lot. We've partnered with Wahoo, which is an e-mobility company in Ghana. We finance solar taxis, solar buses, etc. So this is to drive inclusivity in areas where you don't really see the vulnerable or the less considered, and bringing them into the financial system and supporting them in the way that we give them highly competitive pricing, and not just pricing as well, but support to grow their business to ensure that it is sustainable, and they also become included in the financial system, bringing jobs and creating the ripple effects that we want to see in the whole ecosystem. Thank you.
Thank you, Rachael and Mamoun.
Honestly, I will do the exercise and tell you where we're first as well. But I think it's very interesting because also the challenges in what we're doing. First of all, just to answer your questions, and as said by Access like Ecobank, of course, we are first somewhere in Africa as well. We're at the top 3 in terms of ESG. Globally, 44% of our portfolio is sustainable investments, which is one of the highest in Africa as well. And we are very quite advanced in terms of climate risks and so on. Now the question is not where we are, but what we are doing and how we can scale up. Because the first question is to say that will be maybe 4 to 5 million people in Africa in 2050. Population will more than double, meaning that by 2050 more than half of the population in the African continent will be under 25. He's been talking about need. Where we need this need today? We're talking about 2 to 2.5 million. Here we have less than 3,000 people. Ecobank may be the same, for instance, exactly the same. When we talk about what we do about impact, social, environmental impact, we're working with incubators as well, working on building, social housing, etc. How many people are we really reaching? We talk about 2.5 million people. So what we need to do is really to scale up what we're doing. And how to scale up is just talking to start to say that way, that during the time, I think that we should really talk about this. Some people only talking with ourselves. Okay, we can say first here, do this and do that. Okay, great, fine. Let's say that we're doing our share. in what should be done in global humanity. We said humanity, etc. Same people. Now we need to expand. We need to have a higher voice. We need to have even more impact. We just like group ESG somewhere was responsible of. But the whole banking system, the country should be ESG responsible. We should not limit this to some company or some people that comply with peers or identify anything like that. We need to have a much higher impact. How can we reach that? When you talk about the regulation, etc., the regulation should go further than that. We've heard that, for example, NZBA today, a lot of banks withdrew from NZBA. So what we stand now? Do we say that we stop zero banking advice by 2050, or combined with what the transition, low carbon transition by 2050? Where do we stand right now? Are we going to lose really 4 years or 5 years with Trump? So what's happening globally? And we need to have a higher voice, to have more impact. We really need to stand by ourselves and find a way, a global way. Maybe the advice could be, like we say in French, tribune, so I'll say that in English, but raise our voice, but you really need to find a way to raise our voices higher. Here, it's between us, we're between experts and specialists. Everybody here is understanding what Ecobank is saying, what Access Bank is saying, what Bank of Africa is saying, and sorry, but what African risk capacity is saying. Okay, everyone's understanding our jargon, which was said this morning. But how do we make sure that more people can get influenced about what we're doing? And I think this is really the most important part, besides what we're telling, where we are first and what we're doing. Thank you.
I think that is a great question to leave the audience to think about and share their ideas with us through your social media about the program that we had yesterday and today. And since we're over the time, thank you so much for these amazing speakers and the super important ideas that they've shared today. I love your question. I think it's important that we question ourselves on this and how to do it. So thank you so much. And thank you so much everyone for being with us today. In the